Hey everybody, Courtney Smith here with our Wall Street winners for June 24th. This year is flying, and so is the market. And of course, once you read this, you'll be flying as well. Now, the S&P broke to new all-time highs. All-time highs. And normally you don't get this type of long consolidation followed by a breakout the first time through. So normally you'd expect the market to stay under the consolidation or at the breakout level or near the breakout level for another several days, okay? Now down at the bottom you can see that what's happened here is that this last rally occurred on heavier volume. We saw increasing volume. So last week I talked about how the first part of the rally was on weakening volume, but now we're seeing an increase in volume, which is confirming that this bull market is now solid. But look for consolidation for a little while first. Dow Jones. The key here, of course, is we broke to new all-time highs as well. And look in the upper right-hand corner, and you can see the incredible widening of buying pressure over selling pressure. So the green line shows buying pressure, the red line shows selling pressure. Buying pressure up, selling pressure down, that's the definition of a bull market. Also, the black line turned up, which once again is a confirmation that we're back into a bull market. Nasdaq hasn't made new highs. It's lagging. And this is one of the reasons why I'm not looking for the S&P and the Dow to continue higher. We need to get the Nasdaq moving up as well. Okay, we need to see it confirming as well. We need to have everything in a bull market. Now, if we have the Dow and the S&P in a bull market and the Nasdaq not, that means we really don't have a lot of breadth in this market, which means it's a weak bull market. But look for consolidation, and during the consolidation, I think we'll see the Nasdaq start to catch up. Seasonality still neutral, but look at that purple predictor is suggesting we're going to see the Russell 2000 start to rally up again as well. It hasn't made new highs either. Another one that's lagging. Seasonally, it looks like a little dip, then another move. Now notice one thing here. Market should rally up to a high in July. So we got a few more weeks of this bull run, and then it looks like we have a dip from middle of July into middle of August. So keep that in mind. The yield curve rallied here. We're still below zero. But it rallied because long-term interest rates really had a big move, and also the market's starting to believe that the Fed is going to be cutting interest rates. So we're seeing Treasury bills come down. So that's helping out our yield curve. But frankly, too little, too late. Asset allocation, we're getting money out of the bond market coming into the stock market. So that's bullish for the stock market. In addition, the market wants more risk. And when they want more risk, that's bullish for the stock market as well. Global shares, new all-time high there as well. Bonds. Now, this is the one I wanted to focus on for a second. We broke to new highs. Not all-time highs, but new multi-month highs. And then you can see on Friday, it was collapse-orama. And so what we're seeing is that I told you we'd move to new highs last week. I think we're still going to move to new highs again, but we're in a retracement zone. So the retracement zone is going to sit here for a while. We're going to then rally back up and approach and maybe even break those highs. But that whole process that I just said is going to take a week or a week and a half. Here's why. Look at these indicators here. The green line is the 10-year Treasury yield. So you can see it's just going down, down, down. Main reason why it's going down, down, down is the blue line, which is 10-year Treasuries in Germany. German 10-year yields are below zero. You have to pay the government to lend them money. That's just crazy. Now look at the gold line. This is the price of gold, and it's skyrocketing. As you know, I'm long gold, and I'm feeling good about it. But also notice the chart itself. That's the CRB, the commodity index, and it had a big rally on Friday. Now, if you combine the CRB with gold, that's about a 6-month leading indicator for bond yields. Okay, dollar's been coming under a lot of pressure lately. This is actually a bit bearish, but we'll leave it at that. All right, gold. I told you I'm gold. The last 2 days, you can see the incredibly heavy volume that we're seeing here on the futures market. That kind of volume could be either an acceleration or a top. And I don't think it's a top. So I think it's an acceleration, and we're going to see gold go even much higher. Our gold key indicators. The one at the bottom, that's the yen. It's been bullish now since the end of April. The one in the middle, the CRB, was pretty much bearish, but it's now turned mildly bullish. And the top one, which is the euro, has turned solidly bullish. So all three indicators are bullish for the first time in a long time, in months, actually this year. And that's one reason why I remain long gold. Crude oil. I told you last week we're going to start to see a rally, and we're going to start to see a rally. I think right now my objective is the lower $60 level, maybe get as high as 63, 64, but we're just starting to see a tightening of supply. Obviously, places like Iran, Venezuela, etc. are still suffering a lot. But look for this to continue to rally here. We've also had a couple of special factors. Obviously, the issue in the Middle East with Iran is a big reason why we popped up over the last week. That's not going to get any better over the coming week. In addition, we're just seeing those kinds of things, and that's giving us sort of special emphasis on the bull side. Bitcoin, we talked about this last week when we broke the new highs. I said we got to stay long. And you can see that the market has accelerated, and we closed almost at 11,000. And of course, we got long down around 4,000. So we're almost, we're getting up around tripling our money on this thing over the last several months. Right now, got to stay long. I'm going to leave the stop loss at that 74.74 level for now, but look for it to continue to move higher. And of course, as it goes higher, I'm going to start to get more. There's no reason to believe we're topping yet. So I'm going to not be super aggressive at raising the stop, but gotta stay long. And it looks very, very good to me right now. Okay. Orlando, Las Vegas, got to come to our Stock Financial Freedom System. We've confirmed the date on the master class. We've confirmed the date of the Las Vegas event. All dates are now confirmed over on the Option Success School. Once again, Orlando is really filling up quick. So if you're over on the East Coast or the eastern side of North America, then you really should be coming over to Orlando. And we've confirmed all of these dates as well. So get it, okay? Also note there, hotels is also confirmed. If you ask for the no refund room, you should be able to get a night there for about $87. That's a cheap price. Okay, also, you know about this. All right, that's it for me, freebies. Love having you here. Tell your friends, and fully paid up members, hang on just a second.